Welcome back, traders. What we're going to do in this video is we're going to be walking you through how to use manual profiling within the TickBlaze platform. Now, manual profiles is a custom way for you to pick any location on a price chart and draw volume profiles so you can assess the details within that location. Now, the key here is that the manual profiling is a part of the drawing tools function. So under the toolbar, you can just hit down and you can see under manual profiles. When you click this, you'll have the ability to just pick a spot on your chart and then draw a box, which will basically calculate the data and it will load the volume profile. Now, you can do this in small locations. You can do this in big ranges. You can do this for trends. You essentially have the ability to draw a location of volume for any given point of interest on the chart. And you can ultimately remove them by simply just removing all draw tools, okay? Now, the key here with the volume profile is that you have the ability, okay, to move them around. You can relocate the volume. If you want to extend the range, you can drag and drop, you can extend the volume. It's a very flexible, very customizable way to assess market intelligence and market data. Now, why is this important? Well, because sometimes you want to assess the liquidity. Maybe you want to draw a profile for this entire trend and you want to identify high volume nodes, low volume nodes, the point of control. You can also see the VWAP that is actually trailing inside of the profile. Now, when you're building the volume profile, it's very important that when you first apply it, it's not going to be set up the way that I have it set up here. You have to double click the profile and then essentially come inside the parameters, and you have the ability to choose whether you want the data to be coming from minutes, seconds, or ticks. And for intraday trading, a lot of traders will choose ticks because it'll give you the most granular look and feel. You could use seconds, or if you're, let's say, using a 5-minute chart or a 15-minute chart, you could use minute like I have chosen here. Now, I normally set it for ticks because I prefer that I have the ability to choose how wide my profiles are based off of my setting. And since I'm using 4, that means every histogram on my profile would be 4 ticks. Now, you can customize this because each market has different thresholds with granularity. The Nasdaq's got many ticks, whereas the S&P has few ticks, right? So you can change that. You know, if you're trading Apple stock or if you're trading Bitcoin or whatever the case may be, you'll have to adjust the settings as you see fit for your market. And then you can actually save templates. So depending on if you wanted to save a template for the S&P or a template for the spiders, a template for Apple or Bitcoin, you can do so accordingly. Now, the big part here is the styling. This is where all the settings are, and you just click the drop down. You'll be able to choose all your colors. You can choose the profile width and settings. You have the ability to come in here and choose what you would like to see. You can turn the VWAP on down here. You can choose to have prices on the value area highs and value area lows. The biggest thing is that once you set all your settings, make sure you go under the settings tab and hit save as default or set as default. That ensures that every time I click on a profile, all of the profile data looks the same as I would like it to be. And this is very important because if you're going to be drawing on many markets, many workspaces and desktops, you're going to want it to look and feel the way you want it. Now, as I always do in these videos, what I like to do is I like to teach a strategy, right? Because I could show you the settings and then I could just leave you to go figure things out. Or what I could do is I could walk you through some hidden advantages that most people aren't aware of using manual profiling. So what I normally like to do is I like to give you a strategy that you can look to apply or learn, and then you can go and test on different markets. So what I'm going to do is I'm going to just drag a little notepad down here. And for manual profiling, there's literally an endless amount of ways in which you could trade. You could trade high volume nodes, low volume nodes, VWAP, retest, point of controls. You can trade ranges, trends, you name it. Because manual profiling is about complete customization. You can draw the profile wherever you want, however you want, and basically choose the way you want to trade. But over the years of being a profile trader, and I've worked with a lot of auction theory traders, is that there's certain things that happen in the market that most people don't even understand is there, and it's screaming you right in the face. And I'm going to teach you a trade that I've known for years that nobody else talks about. And I just, to the life of me, I don't understand why. And I truly think it's because most people don't know that it exists. And it's because most people don't truly understand what's happening inside of the auction. So what we're gonna do is we're gonna identify big trades. What do I mean by big trades? Big moves in the market, big capitulations. Wherever the market just rallies to the moon or just pukes, it just flushes, right? We'll call these explosive moves, okay? And what ends up happening is the profile is either gonna create a B shape or a P shape distribution, okay? So what I'm gonna do is I'm gonna explain what this means. In profile theory, you either have a D-shape auction, okay? You have a P-shape auction, or you have a B-shape auction, okay? D-shape auctions are when you're gonna trade ranges. So your markets are gonna go like this, and then basically a D-shape auction is gonna go like this. Normally you're gonna trade the lows or the highs of the distribution, okay? When the market rips, and when I mean rips, I mean really rips, and I don't mean a trend like this that everybody can see. That's not a rip, that's a trend, that's a healthy moving market. If you notice, I've got arrows drawn on the chart, right? I've got essentially locations here, 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 and it doesn't happen every day, but when it happens, it stands out like a sore thumb. And let's just zoom in here for a second, okay? You can see if I just look at this trading day, that is the most prominent move of the day. It is literally it just dumped. It's normally based on fundamentals. You can take a look at the time. It's almost always gonna happen after a big news event. And this is why I love this trade so much, is that anytime the market has news, like an FOMC, CPI report, interest rate decisions, wholesale inventories, inflation, GDP, whatever the case it is, you're gonna have an opportunity to exploit this setup, which means it happens all the time and you can learn it and you can look to trade it, okay? Now, what is the trade? Well, the trade is simple. If you're going to trade, okay, a downward moving market, a massive puke, we call this a puke or a flush. The market's just flushing everybody out, right? And in these situations, we're creating behind the scenes what nobody knows, okay, is a B-shaped distribution. But the thing is you don't know the B is there yet. The B hasn't formed. This is what we call the leg, okay? And then the B-shaped distribution is going to form here. And in the hard right edge, when this is happening, okay, I'm going to do this, and this is why I love teaching this. In the hard right edge, all you see is the market at the top doing this, and all of a sudden, boof, it just does this. What most always is going to happen is the market's going to find its bottom, wherever that is, and it's going to bounce, and then it's going to consolidate, right? And that's going to form a B, and that consolidation may go this way, or it may go back up this way, depending on whatever the market's going to do. But it needs to exit. It needs to take all that orders that were creating that drop, and that order has to exit. All the big traders up here that created the drop in price are going to flush the market, and they need to offload, and they need time to do it, which is what creates the distribution in the B-shaped profile. So why is this important? Well, when you see this happen, these really big puke moves, what I normally do is I draw a little box around the consolidation, okay? I draw a little box around the consolidation that led to the move in price. Why? Because that is the last time the market stayed in a location to execute enough orders at price to create such a substantial move like that. And what I do is I draw a profile, okay? I draw the manual profile from the last inducement candle, which is the up bar before it dropped. You want to see the up candle before it dropped. And then I wait. I don't draw the profile until I see the first candle close in the opposite direction of the massive move. So what does that mean? I'm going to take this candle here and this candle here, and that's going to be where my anchors are for the profile. Now, why? Because that's the inducement that led to the big move, and that's the candle that led to the profit taking starting. okay? And what I'm gonna do is I'm gonna draw a profile from that candle to that candle. Just like this to there, okay? Now let me explain this for a second. In real time, it's gonna look like this, okay? In real time, it's gonna look like that. You're gonna see it moving down. It's gonna be moving down big. Everyone's gonna be like, wow, look at the market's just tanking. Oh my God, big news. What are we gonna do? And then all of a sudden, bam, you see that candle. That is a profit-taking candle. Now I want you to pay attention to the shape of this profile, okay? The shape of the profile is this, and then it goes like this, okay? Now you won't see that like that here at this time, but you're gonna see the value area high. You're gonna see the value area high. Now what's important here is that you've got a value area high and a value area low. As the market's coming down like this is considered expensive and cheap in the auction. So what we do is we wait for the market to come up to an expensive location, and you take a short from the value area high and you target the value area low as your trend trade. This is called an auction trend trade or a profile trend trade. And basically that's exactly how you trade these setups. And we're gonna show you how to take the trade. So you watch it, it comes up, boom, there's the entry, and it drops all the way back down to test the low. So let me just draw a risk reward profile so you can see it right here. That would have been the entry. And there is the profile right there. So that would have been your trade. Okay, so ultimately this is why we take these trades, because look, you get a very, very good fill, and they're gonna drive it all the way back down to the value low because they're creating consolidation in here because they're offloading all the business from up here. And this is a money trade. This is a golden nugget. This is something that nobody's gonna teach you, and I'm gonna teach you how to do it. So let's continue to keep going down. Here's another example. It happened the day before, and it's not me making this up. This is just looking at the volume profile theory, okay? And you take a look, I draw the box. So take a look at this massive move, okay? And I don't mean one candle, so I would not consider one candle. It has to be a series of candles, really, really explosive move. You can see that's massive price action. Impulse, 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 and then it's done, okay? So what I would do is I would draw the box around the consolidation where it started. And then what I would do is after I've had an explosive move in price, I would wait for the candles to start showing me profit taking. 1 or 2 consecutive bars like that will be fine. You could use 1 or you can use 2. There's the consolidation. There's the inducement candle, the first up bar before the drop in price. Draw the manual profile from here all the way down, okay? And you can see it. It stands out like a sore thumb. Draw the profile high, draw the profile low. There's the trade. You take the short from the value area high because it's a B-shaped distribution, which means this is expensive up here, and basically up and drop. And you don't have to worry about trying to locate these trades. These trades are gonna happen when they happen, and you're most likely gonna have to wait for a fundamental push. So on the days where you know you've got big news coming out, just wait for the market to show you what it's doing, and then bang. So let's just draw a risk reward tool around that. Right there, just like that. And that's how you draw the trade plan. And that's amazing. Now, you could keep trying to extend this out like this, right? And it may keep the value area high there. I tend not to do that. I tend to leave it. Because the volume profile is going to be changing. The volume profile, and these things could be moving and moving and moving. So I normally don't do that. I like to let the market show me where the B is starting, and that's gonna dictate expensive and cheap prices. Now everybody's got a bit different style on this, but that's the way I like to teach it, okay? Let's go to another example. Let's go find this one. Wow, what an explosive move. Okay, so let's take a look here. Huge move, right? This one was the 3 o'clock, so it must have been something coming out of the European session, right? News in the overnight session in London, whatever the case may be. I'm going to take my box. There's the consolidation that led to this massive move. The last inducement candle was that white bar there. Let's look and see what happens. I'm going to take it all the way from that inducement candle. I'm gonna draw it again because the chart shifted. One more time, right here. Okay, and I'm gonna draw it all the way up to the first down candle for the profit taking. There it is, okay? Take a look at this level right here. Okay, I'm gonna drag this over just one more time. Right, there it is, like bring this over here, just like that. There it is, okay? So you can see when you draw the profile, look at the distribution on the P side. It was a P-shaped distribution, okay? Came down, but the value area stayed way down here, okay? Now this one here, okay, this one here didn't go all the way up to the top of the auction, and that's fine. But if you draw a trend, if you draw a line over here, watch this, okay? I'm gonna draw a trend line over here, just like this. There was the level. And not every trade is gonna give you a full 3R or a 4R multiple, but if you draw the risk reward on this, okay, take a look at how much that moved. I mean, depending on where you place the stop loss, you could have had a bigger stop, smaller stop, but I mean, it gave you a 1-to-1, 2-to-1 for sure here on this move, right? And that's good enough for a day trade coming out of these locations, right? Let's take a look and see if there's one more location. I wasn't sure if I drew another spot. Yeah, right up here. Huge trade. Okay, so let's take a look at this. This is clear as day. You can just see it. And this is why I love this trade so much, is for manual profiling. You could use the manual profiles any way you want, but if you're looking for a strategic edge and you want something that is going to be the money shot every single time it happens, I promise you this is it. You can see clear as day. That's 1, 2, 3, 4, 5, 6 capitulations. I love it when this happens because it always says, hey, come and trade me. This is going to be a huge setup. And if you take a look at the inducement, there was the inducement candle, the last up candle. And then basically this was where the profit taking started. Those first two up bars down below, right? So if I draw my box, there's my little consolidation. And then I come back down here and I grab the manual profiles. I click on it, okay, right there. I come back down, okay. Look, you can see this. It is clear as day. Thin market on the drop. Started to build some auction down here, which showed the value area is consolidating. Take a look at the heat. There's no heat on those trades. You don't get stopped out very often on these because they are money trades. Take a look at how it drops. And it dropped like a rock right down to the value area low. And it came almost to the third target, literally right down to the bottom. And these are great trades. For a day trade, these are great because these are 5-minute candles. So you get 1, 2, 3, 4 bars in it. You're in the trade for 10 to 20 minutes. And that's a really, really good income, okay? So what I encourage you to do, okay, is find those days where the market just explodes. Take the theory that I just showed you. Make sure that your profiles are colored and set up the way you want. Find the inducement candle that led to the big move in price. Draw the auction and make sure to only draw the auction to the profit-taking candles, and then wrap your trades around the value area high or the value area low, depending on if it's a P or a B-shape auction. Remember, B-shapes are for downtrends. You're trading the short, down. P-shapes, okay, or for uptrends, you're trading the long, up, okay? And if you have any questions, let us know. We'll be more than happy to point you in the right direction. Remember, make sure that you use the draw tools for your manual profiles. Go in and set all the colors up so that all of your details are the way you want it, and it becomes a very customizable and fun way for trading. Okay, guys? Take care. Hopefully you learned something in this video. This is how you use manual profiling for killer trades. Take care.